Alrighty, folks, we know that today that real estate investing is hard. It's expensive. The unaffordability is tough. Rates are high. Writing disrespectful offers, follow up, all of that stuff. It just takes a lot of work. We're going to talk about something today that I have never talked about on this channel, and that's hard to say when you have 15,000 videos. We're going to talk about fractional real estate investing, and we're bringing Joseph to the show. Joseph, how you doing, buddy?
Good. Thanks for having me.
Absolutely. Why don't you do yourself or do the audience a favor, Joseph? Give kind of your resume. Who are you? What are you doing? What's your history? Just so they have the background before we dive into the topic.
Sure. So I've been a real estate investor for 20 years, since 2005. I've been an agent most of that time. I worked a lot on the commercial side. I'm a former real estate attorney. Only did that a short time. It's not nearly as fun as being an agent.
It's not like you do it on TV.
Right. Exactly. So that's been, I run a team of real estate agents in San Antonio, Texas, who works solely with investors. For the last 4 or 5 months, I've really gotten into fractional real estate investing because I get a lot of people that come to me and they might not be ready to invest in a whole property yet. Maybe they've just got, $4,000 or $5,000. They're into real estate. They want some exposure. They don't want to just keep waiting. And that's what got me looking, down that path.
Yeah. So I definitely want to dig into that, but I want to go into the resume a little bit because you did mention one thing. You run a team in San Antonio of real estate agents focused on investors. And, my opinion is, I don't know, 95, 98% of real estate agents out there are residential home buyer agents.
Mm-hmm.
What in your mind, what makes agents focused on real estate investors? I don't know if you want to say a different breed, different level of service. What does that team do for real estate investors?
So I think what makes us really different is one, I'm an introvert and I don't do an emotional sale. And so I cannot walk into a home with you and get excited about, it being your dream home or what the kitchen looks like. And so I was never going to be successful as someone who sold properties that way. I'm a numbers guy, and so all our team does is focus on what those numbers are going to look like, what type of properties, and what's working in our market today. So, for example, when I started this team, and it was just me at the time in 2018, we were doing all small multifamily here. Most our average deal was a fourplex. We do some a little bit bigger, some a little bit smaller. But that was working really well. Over the last couple of years, almost all of our business has been either short-term rentals. Really big homes with a pool still do real well as short-term rentals here, or brand new construction. You've seen the really cheaper homes from Lennar because of the rates that they're giving out. You can still, with a decent size down payment, you can still buy one of those. That works for some people. It's not necessarily the deal that I want, but it's if somebody who really has to park some money, it works for them. And that's, most of our investors are out-of-state clients. Our typical person is someone that works in tech in California or in finance in New York, and they're looking for some real estate exposure. And San Antonio is a market that gets a lot of people from other places.
Yeah, it's funny. Olivia and I, if you read my book, One Rental at a Time, I talk about 2006 because we were in the process of selling our houses. And we actually spent the most time in San Antonio. I learned about, I forget what the real estate agent called them. I think he called them beauty marks, right? Because your land is, right, I don't know what it is. Basically, you get cracks in all the plaster or whatever.
Right.
That's what he called them, beauty marks. I don't know what they're really called, but anyways, I learned all about San Antonio. We actually wrote up an offer on, I think it was 5 fourplexes in like a cul-de-sac. So we would have owned the quote unquote street, but it didn't go anywhere. So anyways, we stayed in California. So I think it's really interesting because I actually think more, I don't know, I'll call you a broker, right? A team leader. I think more teams should focus on investors because it's an underserved market. Investors are really simple in my mind, right? We have a buy box, right? What are we looking for? And then we have a minimum expected return. And if you smash those two together, as an agent, you know what you're looking for. It's pretty simple.
Right. And what it does really, it just flips the business model over, right? So for an average retail agent, they spend 80% of their time on client acquisition and 20% of the time actually helping clients.
Mm.
I spend very close to no time at this point trying to get new clients, and almost all the time trying to find those deals, right? It's much harder to find a deal than someone
Yeah.
who wants to buy a good deal. So.
No, it's absolutely right. I mean, and that's exactly where we are today. Just in case somebody's watching this and they want to get started in San Antonio, or they want to talk to an experienced person, how do they reach out to you? We'll ask you again at the end, but let's hit it here just in case somebody gets the beginning.
Yeah, easiest way is just send me an email, joseph@birdy.com. So joseph@birdy.com. That is my email at the brokerage where I work. And so I look at those all the time. I
There you
get a
go.
lot of spam there, but because I share it everywhere, but
Yeah.
I will respond to that.
Very cool. Joseph@birdy.com. So great. Now let's switch gears into what you've been fascinated about for the last quarter or so. Let's first define what fractional ownership of real estate is. How would you break it down kind of at fifth grade level? How would you pitch it or tell the story?
Yeah, so it's a little bit tough because there's a lot of different models of it right now, and there's not sort of a standard. But all you're doing is most of them are investment properties, and so somebody owns an investment property and they want to sell a little piece of their equity, and you are coming in and buying a piece of that equity, and so you might get some controlling rights depending on the platform you're using, where you can vote on some of the major decisions. You'll get a piece of the cash flow, assuming there is cash flow. And then if that asset is sold in the real world, you get some of the appreciation. On some of the platforms, you also have the ability to sell your slice, your fraction on a secondary market. So you may be able to trade in and out of the tokens. Most of the time they're called tokens because a lot of them are on a crypto blockchain. That's the way that yeah, I know. I don't want to get too into the weeds of that, but it is. That's why if you
there's actually, so again, it's interesting when you were talking about fractional, my brain went to the buy side, right? You're an investor, you find a deal, let's call it a fourplex. It doesn't work. You probably go create an LLC. You get 5 or 6 friends to contribute. You get, I don't know, whatever it is, 20% each. That's what I thought you were going to tell me. What you're telling me here is there's actually online platforms where me as an owner of a property could go, hey, I own 123 Main Street. I've got 50% equity. I can't do a cash out refi now, but I need some cash. What I'll do is I'll sell a quarter of my rights for X amount. And there's a blockchain out there that records all of that.
Right. Exactly. And so,
wow.
Yeah, and that, like I said, there's a couple of different models. That's one. So, and I'm very focused on it, on the me investing in someone else's deal aspect of it.
Right.
Because, like I mentioned, my motivation is when a client comes to me and they're just not financially prepared yet to buy their own property. This is a good way to get started, but to keep them interested in real estate. I actually think there's an opportunity to use some of these platforms as someone like, you or I, who owns investment properties and wants to get some of that cash out and bring other people, into our deals.
I think it's called equity stripping in private equity. It's basically the same idea. I think that's what it's called. Some of my rich New York friends talked about it over the last decade. That name hits me. But I mean, think about it. Yeah, we own. We bought a house at the bottom. It's now went up 10x. We can't do a rate and term or a cash out refi today because the numbers don't make sense.
Right.
We could do an equity line, but again, that rate is variable. What if you found a way to strip out 25%, sell it to someone else? I'm just trying to play this out in my head. So you're selling your position, so that would have tax consequences because you're changing ownership, but that's, that is what it is. You're giving up some of the future depreciation, very likely. You're giving up some of the appreciation because, again, you have a partner. I'm just trying to play this out in my head. And then again, the beauty of that is the buyer, again, using your word token, they could resell it, right? So again, if we go through a crazy appreciation, they don't have to wait for me, the owner of the 70% or whatever the number I said, because maybe I don't want to sell it till I'm dead, and that could be 50 years from now.
Right.
You could, but hey, you need your money back, your $5,000. Oh, by the way, it's now $7,000. You could sell that token to some third party, and the blockchain would record all of that.
Yes, that's exactly right. And I think, if you're familiar with like just real estate syndications, it's sort of very, very similar to that model, to a certain extent. But the real benefit of it is there's liquidity, right? Like you said, you want to hold it forever. Well, if you do a typical syndication deal, a lot of the people who invest in those deals with you, they're not going to.
They have clocks. All syndications have clocks,
right? Yeah. But this way, those people can sell out when it's good for them. And one of the nuances of this is, if you were someone who brought a property to the platform, like I said, I mean, there's 7 or 8 of these platforms. Some of them will let you as an individual bring stuff. Some of them, it's just the company doing it, and so individuals can just buy on it. But if on one that you bring it, you can often charge a management fee if you're the one that continues to manage the property. Like it is very similar from your perspective, I think, to doing a syndication, but not having to be the one to really do any equity raise. You just come on the platform, they charge you a fee for it. They do some weird stuff with how they structure your debt with it, which I think probably is too complicated to jump into. But like I said, I mean, there's a couple of different models. But yeah, the reason I'm the most excited about it are a couple of things. One, I think it's the future. I think that a lot of investors will start seeing it as a good way to raise equity, especially in a world where we can't do cash out refis like we used to.
Yeah, no, I get it. Yeah, I mean, if rates go to 8%, like I think's coming, this is a very elegant way to strip out equity without going to banks. It just is.
Right. And I agree as far as in concept. It's still a new industry, and I think that they're all, to call it elegant. Yeah. They definitely have some lumps in the way that the execution works.
Yeah, let's be clear, folks. I have no relationship with any of these folks. I never even heard about it until this meeting. So I'm just playing this out in real time, as hopefully you can appreciate. But again, I think it solves a problem. Right, because I speak to investors every week, and lots of us have equity out there, and more importantly, Joseph, we actually see a lot of opportunities coming. Right. And if you were someone who did not raise dry powder, you could be stuck. Right, just if you have opportunities but no cash, that's a problem.
Right.
Yeah. Again, could you name one of these things again? I have no relationship. I just want to go look and play around.
Yep. So the one that I spend the most time on is called Lofty.ai. I think they're the one that's set up the easiest for somebody to actually bring their property there, versus like you have to have some inner relationship, because some of the platforms, it's just either one company or a couple of companies that put their properties on, and then other people buy in. But so the ones that you could actually take a property to today, Lofty.ai, they are one, like I mentioned, that they structure your debt a little bit weird, where you actually take care of your debt outside of the equity structure. So their cash flow that you pay out is based actually just on the NOI versus on your net cash flow after the debt. But then you get additional rights in the appreciation because of the way they structure. Like it's a little bit weird, but they do it to avoid the due on sale clause if you have one.
Yeah. You got debt, you got one.
Right, exactly. I want to mention, though, from the other side, if you don't mind, of why I think it solves another problem for real estate investors. And it's one that, even if I wasn't, like in my situation, I'm not really trying to grow my portfolio at this point. But it creates, I mean, I say that, but I'm still buying stuff. Yeah. But it creates a so I'm a classically trained finance guy originally. And one of the things that's always bothered me about real estate, even though I've been all in on the asset class for 20 years, is that you don't get to diversify, right? Like it is, almost every real estate investor has an extremely concentrated portfolio.
Sure.
And if you're someone who's using this platform, this year, since in the last 12 days, I've bought interest in 4 or 5 different properties, and then some of the platforms you can buy interest in mortgages too. And I've bought probably small pieces of 10 or 12 notes, um, and all while sitting on my couch. Like it's a way. And overall, I think I've only been doing this for 4 or 5 months, and I have pieces of 27 properties, 28 properties, and 100 different notes.
So let's play this out. So again, you're putting real capital to work. So what is so let's talk about the properties first, the notes second.
Yep.
So you said 28 properties, I think. So what are you looking for? Are you looking for trophy assets? Are you looking for different states and diversification? Are you looking for different property types, age? What would be your buy box of something you're scrolling on this and going, hey, I'm going to go deeper? What are you looking for?
Right. So initially, my goal was really to experiment and figure out which, so I have some dogs on there for sure. Some of those 27 properties are not great. On My big goal, though, I'm really attracted to the idea of getting very wide diversification. As over time, my mind has shifted a lot from growing wealth to protecting it, and I think
Sure.
with a lot of the recent natural disasters you see and stuff, if you're concentrated in a market that gets hit with a fire or a flood or a storm, it just could be devastating, right? And so to
Sure.
have, up until recently, I've invested in several markets, but I've always moved to wherever I'm buying. And so, literally everything I've owned for the last few years has been in San Antonio until I started doing this. Now I've got stuff in the Rust Belt, which is not a market, a lot of markets that I never would have touched because I usually stay away from places that have shrinking demographics, right? If you have a shrinking population. But if I'm buying a tiny piece of a deal and it's cash flowing well and they've had it on this platform for 3 years, I'm looking at that risk a little bit differently than I'm going to buy a whole property that I have to deal with the tenants and control. And so, to get back to what's my actual buy box at the moment, it's still unclear because there are a lot of different types of deals that I think are good deals. So like there's another site called Mogul where I think they do, or they have a team that finds deals and brings them to the platform. I think they're doing a really good job of picking deals. And so I got a bigger chunk than in a lot of the other ones. Of a short-term rental in Houston that I think is it's one I would be very happy to buy that whole property. But they found the deal. I didn't. They negotiated at a discount that I'm surprised they got. And so I was happy to stick a chunk of money into it. And so basically I'm looking for either I think this is a market that is going to do well long-term and it's an asset that's going to do well, or what's an interesting opportunity on a lot of these platforms is they're a big discount to the real world price. So some people have brought properties onto the platforms, especially the ones that happened in the early days, that were just not managed well. And your token price might be at a 40% discount to what if you owned all the tokens and sold the asset in real life, what you'd get. And so I've already had a couple of experiences where I've bought into a property, convinced some of the other token holders to vote with me, and we sold it in real life and made a little bit of money. I've got 2 more of those going on, so it's almost like a weird flip.
Yeah. Well, it's the whole key to real estate investing is finding a way to find value, and create or force value. And if you could buy something at 40% discount, get the other owners to vote your direction, you could force, realize equity.
Right.
Yeah. So I'm curious on these properties you're putting out there. You've got, you said 27 or so. Are we talking like 3, 4, 5 grand? Are these just little?
You can do even less than that. You can
really?
do as you can buy a token for as little as $25 on some platforms. The notes that I buy in that's on a site called Ground Floor where you're buying just pieces of mortgages. That one you can get as little as $10 per note.
Hmm.
And so initially, because I was experimenting, a lot of them I've only have a couple $100 in. Some of them I have a few thousand.
Okay.
Um, some of them I have more because I think, hey, that's a great deal, and I've been doubling down on. And that's one more thing that's an advantage of this type of investing is you can dollar cost average, right? You can buy a deal and you like that deal at a certain price, and every time that token price dips, you can buy a little more and average
Mm.
down your basis. I've never been able to do that with real property, right? I
No.
mean, it's
Yeah.
so it's a lot of fun to have all these new tools that are more like finance side,
Mm.
regular investor tools. Um, but to be able to deploy it on an asset that if I'm buying a stock, it's really hard for me to know what that company's worth to pick the price, right? If I'm
Right.
buying a token that's backed by one property, it's pretty easy to know what that token should sell for, right? I should
Mm.
be able to look at the price of the and so as the prices fluctuate, especially on Lofty, you just see some wild moves because it's built on the blockchain. You get a lot of these like crypto bro type people investing on there, and so
Right.
the only number they look at is what's the yield today.
Okay.
And so if last month it had, it's a short term rental, and last month it killed it, the yield will show up as being high because they're just annualizing whatever last month is.
Right.
And so you get these weird swings in it. And so if you're really focused on what is this piece of real estate worth, and you're ignoring the technicals of the pricing changes, you can just find a deal that works for you. And then like I have a big list now of properties that I've done my due diligence on, and I know what price I'd pay for it. And maybe it
Mm.
was not the price that I'd pay, that it was that day, but I've several times now gone back and when there's been a dip, and you can set alerts on the platform.
Sure.
And so been able to go back and pick up deals. And again, I mean, it makes it very, it changes it a lot. Like I said, I mean, I'm super excited. Obviously, I'm excited about it, right?
Yeah.
Having
Yeah. You're almost vibrating.
right. But I just think it's so neat because I really believe in real estate as an asset class, and to be able to get people that don't have the money to just go and even there's a lot of people that can't even afford to do their first house hack or something, right?
Right.
Which is how a lot of people get started. But if you can't do that, but you want to, I think you learn a lot about it by, you get notes from whoever's managing it every month. You get to understand what that capex looks like. And I've always avoided, like I said, some of the Rust Belt markets. And now, like when I buy some, just because it's a huge discount, I can still see like, I really didn't want to be here. As far as like the tenant issues and like
Yeah.
having evictions that take 6 months instead of 30 days, and
Yep.
those sorts of things.
Yep. Yep. So, so again, so you put some money to work. Do you get a monthly drip, a quarterly drip, a yearly drip? How does that work?
So most of the sites I'm getting monthly. Some of them
Okay.
actually pay out daily rent. So they take last month's rent and they break it up over 30 days. That way, if you're trading in and out, you're not missing,
Oh,
you don't
okay.
have to trade
Yeah, that,
around the rental day.
that makes sense.
Yeah, it seemed weird to me at first, but once I got that was the point of it, it makes some sense.
Yeah, it makes sense. Yeah.
Some of them are, a lot of the notes I'm buying are pieces of fix and flip notes, and so they don't actually get paid out until
To the end.
after the
Yeah.
sale.
Delayed. Yeah.
Um,
Okay.
but yeah, so it kind of runs the gamut, but most of them you're getting some kind of cash flow at least quarterly.
Okay. So if you were to look at just the actual results over the last or over the 27, what's kind of been the yield? Because again, you have some dogs, you have some winners. Are we talking double digits, or what do you think it is? Kind of actuals.
Yes. So my on the note side, it's easy. My average return is 11%. I've had out of the 100 that I bought, I've had 10 pay off already.
Oh wow.
So I feel really good about that. The A lot of the ones I'm buying are buying just because of a discount and like trying to push for the sale. So for that model, it's really tough to know because it depends on how long we end up holding
Yeah.
it. But
Right.
the ones that have already moved to sale have been between 20 and 30% delta between what I
Yeah.
bought it for and what they sell for.
Nice.
The actual true just buy and hold, what the cash is, um, high single digits, low double digits.
Okay.
Uh, depending on, again, how the type of property,
Sure.
there's for like I bought a piece of a condo that somebody, is just a cheap little condo in, I think, Lawrence, Kansas. But no debt on it. And um but a straight 10% yield, like it just has a good rent, relative to the price
Yeah.
of it. And I don't think it's ever going to appreciate, but I thought it was an interesting little deal. And
Yeah. Yeah.
I'll take 10% on something that is a unlevered asset all day
Yeah.
long.
No, I would agree with that. I would agree with that. So you've been in it for a while. Obviously, this market, like a lot of tech markets, will boom. It'll have a lot of charlatans. It'll have people that change investing forever, right? So there'll be some winners, no doubt. Where do you think this goes? I mean, tech moves fast. Let's say in 3 years, do we have kind of the declared winners, and all the shaky ones are gone? Do you think it happens that fast?
No, I don't, because so we're seeing, well, we've already seen some real failures. And so, but like I just actually reviewed a new platform and bought my first piece of one a couple of days ago that, it's brand new and it's got 3 properties on the site. And it's one of the things that I think makes the future tough for it is, all of them are using the blockchain to create these smart contracts, because that's what
Right.
actually
Yeah, that's
moves
the
the ownership.
yep.
And so far they just are all using different chains. And I think and I'm not a crypto guy, so I don't necessarily know this, but I would love to see them pick one, so that if I bought
Yeah.
an asset on Lofty and I wanted to move it over to Mogul to hold somewhere, where I could do
Yeah.
that. And it
That makes
seems like
sense.
none of them are thinking about, they all want to win, right? None of them want to eventually collaborate. And so um
Hmm.
I think that creates some issues. I don't know if are you familiar with Arrived Homes?
No.
No, it's a Jeff Bezos backed company. They do this, but they're a little bit different. The company picks all the homes. You can go on their site and buy pieces, but I think they're probably one of the biggest right now. But I don't
Hmm.
invest on there because they just have huge fees, because they
Hmm.
know, like, we have this backing. We think, people are coming to us because we seem the
Yeah.
safest.
The
But
bigger their name, the lower
right.
the return. That's
Right,
just that
exactly,
simple.
yes.
Yeah. Crazy. Yeah, I think it's going to be really interesting, because I think what we're going to see over the next couple of years is higher rates than people want. We're going to have a
Right,
lot of people who are cash hungry. Some people could be like that condo in Kansas. They own it free and clear, but they need cash. They don't want to sell. Blah blah blah.
right.
This could. I mean, this could be an answer to that, or will be an answer to that. I think the things to watch for are going to be, who's out there with good intentions versus who's out there just to,
Right.
frankly, steal money. Um, that's all going to come out in the wash, I think.
Yeah, absolutely. And like I said, I mean, there's already been at least one big failure, but they're still out there taking new investors, and it's a little bit, I don't know.
Yeah.
I worry about actually, like, calling them out, because they're a big company, and I don't,
Yeah, no,
but like,
I don't do that on my channel.
right?
Send
Yeah.
send him a private note.
Yes.
Ask him in
Yeah.
person.
Yep.
Yeah,
Exactly.
email Joseph. He'll tell you. Um, yeah, it's going to be interesting. The other thing that jumps out at me is this is a way around the SEC, right? Typically, if you're going to do a syndication, you have to be a accredited investor. All those things. If you're coming in with $25,
Right.
that's
So, surprisingly, some of the platforms are securitizing the interests, and so, like, like Arrived Homes is doing it. They're that big one I mentioned, and they're doing it because they're trying to push safety, right? Like,
right. Of course.
and
Yeah.
then the one where I buy the notes, the ground floor, they're doing it as well. They're securitizing it, but
Huh.
most of the others that are on are not, and they're using a couple different loopholes. They use the investment club loophole, or,
Sure.
for example, the ones that we get to vote and control. They say, well, it's not a security because you're
Yeah.
actually,
I,
involved in the management of it. So yeah,
yeah.
it's really interesting. That's one of my worries for the industry, is that they get too ahead of themselves, and then they just get regulated into oblivion. I think that
Yeah.
could happen.
Oh, for sure. Yeah. It'll only take one or two massive losses for that to come.
Right. Right.
Yeah, we've seen that throughout history. Well, folks, I think this is a very interesting concept. Again, I have zero experience with any of these providers. I have not looked at them. I'm learning just like you. If you have a lot of questions, don't call me. Don't email me. Email Joseph. Joseph, what's the email one more time?
Joseph@birdy.com. So BIRDY.com.
Yep. An email
And
of
I have,
theirs. Go ahead.
oh, I was just going to say, I've put out a bunch of videos about this. They're all just me sitting on my couch, sharing my screen while I'm investing on the platform. You can
Nice.
find me just searching my name on YouTube, because I have
What's
a
the name of the channel? Is it just your name?
it's just Joseph Ketchapalia. Yep. I have, it is
So
a
simple.
Yeah, you can actually, I have a redirect. You can get there by going to antifragilerei.com.
There you go.
I'm sure that's not that much easier, I need,
Exactly. Shorter, Joseph. Joseph, shorter.
yeah, I know. Sorry.
Oh, man. Joseph, this is a lot of fun. I love talking about new stuff. Again, folks, reach out to him if you have any interest or questions. Also, if you want to buy in San Antonio, look the guy up. He takes care of investors. Joseph, you're amazing. Thank you so much.
Thanks a lot, Super. Have a good one.